All right, let's get right into it. For years, trying to predict Bitcoin has been, the holy grail of the financial world. It's volatile, it's chaotic, and it's been famously impossible to nail down. But what if a new AI has finally actually cracked the code? Today, we're going to take a look inside a system that claims it can do exactly that.
94%. Just take a second and let that number sink in. I mean, in a world where getting 60, maybe 70% accuracy is seen as a huge win, 94%, that sounds almost like science fiction.
So yeah, this isn't just a number. It's a question that could totally reshape the high-stakes world of crypto trading. Just imagine, for a second, knowing with that kind of certainty whether the price is about to go up, down, or just stay flat. Well, that's the incredible promise of this new model we're talking about, Wide-TSNet. Now, to really get why this is such a massive deal, we first have to wrap our heads around the problem it's trying to solve. Forecasting crypto is just ridiculously hard. The market can be moved by literally anything, from global economic news all the way down to a single tweet from the right person. It makes looking at past patterns, a very tricky way to predict the future. Okay, so this table here tells a really cool story of progress. For years, we've been seeing these small, steady improvements. You had your traditional machine learning kind of hovering around 55 to 70%. Then, more advanced stuff like LSTMs and transformers came along and pushed us into the 80s, which was, really impressive. But then, look at that jump to Wide-TSNet. That's not just another step up the ladder. It's like a whole different league. It's a quantum leap. So the big question is, how on earth did they do it? Well, the secret sauce here isn't just throwing more computer power at the problem or tweaking an algorithm. The real breakthrough, the genius of it, comes from a total change in perspective. They stopped treating price history like a simple line on a chart and started looking at it as a picture. And this right here, this is the magic. It's a technique called Gramian Angular Field Encoding, or GAF for short. Now, to put it simply, it takes that one-dimensional line of price data over time and transforms it into this rich, complex, two-dimensional image. And what's so clever is that this process keeps all the timing relationships, the sequence of what happened when, but it presents it in a way that a powerful image recognition AI can actually understand and analyze. So how does this whole transformation happen? Well, it's actually a pretty straightforward three-step process. First, you take the price data and you scale it down. Simple enough. Second, these values get turned into angles, almost like you're plotting them on a compass. And finally, the relationships between all of those angles are used to create a unique image. Think of it like a fingerprint for a specific piece of market action. All right, so now that our data looks like a picture, we can finally feed it into the AI's brain. And this brain is really special. It has this very clever hybrid design that gives it the power to both remember what's happened before and to generalize for what might happen next. And this flowchart here shows us that data's journey perfectly. Over on the left, you've got the raw Bitcoin price data coming in. It gets turned into those GAF images we were just talking about, and then it goes into the AI's brain, that ResNet 34 backbone. And from there, you can see the info splits into two different paths, the wide and the deep components, before it all comes back together at the very end for that final prediction, up, down, or stable. To really get this hybrid approach, just think of it like two different specialists working on the same case. The wide component is like a seasoned veteran detective. It has seen it all, and it memorizes very specific patterns and known connections. Then you've got the deep component. This one's like the creative rookie partner. It's great at learning abstract ideas and using them to handle brand new situations it's never encountered before. Put them together, and you get the best of both worlds. And the engine that's driving this whole operation is a real heavy hitter called ResNet 34. This is a neural network that already learned how to find patterns by studying millions of everyday images of cats, dogs, cars, you name it. So by using it, the model gets this huge head start. It already knows how to spot complex patterns before it even sees a single price chart. Now, the theory is absolutely fascinating, right? But the real question is always, does it actually work in a way that matters in the real world? So let's look at the performance and what this could actually mean. Okay, we started with that mind-blowing 94% accuracy, but here's the full report card. Look at these other metrics, precision, recall, F1 score. They measure how often the model is right when it calls a move and how well it avoids false alarms. And they're all hanging out right around 90%. This is so important. It means the model isn't just accurate once in a while, it's consistently reliable. So, what can you actually do with something this powerful? Well, the applications are pretty immediate. You could generate super precise trading signals. For folks in risk management, it helps cut down on costly mistakes by avoiding those false positives. And for market analysts, it can uncover these hidden patterns in volatility that the old tools would just completely miss.
And here's something that's absolutely crucial. This isn't one of those black box AIs where you get an answer but you have no idea why. Nope. The creators actually built in tools so you can see its logic. This means an analyst can literally ask the model, hey, why do you think the price will go up? And the AI can point to the exact patterns in the data that made it think that. For building trust and accountability, that's a total game changer.
But of course, no model is a perfect crystal ball. So to really get the full picture, we have to talk about its limitations and, what's next for this kind of technology. So like any model, its success really depends on the past being a pretty good guide for the future. If some massive, completely unprecedented event happens in the market, it could still get thrown for a loop. It also needs a ton of historical data to learn from. And yeah, it takes a decent amount of computing power to run. But the research is not even close to being done. The team is already working on expanding the model to predict other cryptocurrencies. They want to start feeding it news headlines in social media sentiment. And they even want to build a version that can adapt on its own as the market's behavior changes over time. Pretty cool stuff. And all of this incredible innovation really brings us to one final, really big question. As these unbelievably powerful AI tools get better and better at taming the chaos of financial markets, who are the real winners? And what does that mean for the rest of us? That's definitely something to think about.